Hey, did you know last month there were 14,377 stock picks made just on YouTube? I made that number up, but there were a lot of stock picks made. Anybody can make them. They're super simple to do, but you know what you don't get? You don't get YouTubers sharing what became of the stock picks that they made. And because our approach is unique, we're not just picking stocks around here. Okay, we'll give you one at the end, but we're also going to review them. So we're going to look at our last 12 months of cheap stock video picks and see how they did. Now, as a performance gauge, we will be using VOO or the S&P 500 just because it's super simple and everybody's familiar with it. But before we do that, remember that we share all of our weekly portfolio activity in the free weekly newsletter, which you can find linked below or over at DapperDividends.com, where you can also find the portfolio links to view them anytime you want. And please share in the comments if you like watching the cheap stock videos too. You can find the link for the spreadsheet down below. So what we did, we had 9 videos last year that we made cheap stock recommendations, picks, buy now, whatever you want to call it. And then over here on the right, we had our first ever stock pick video from November 23rd, 2020. And I say the 23rd because the way I did this, I started the clock ticking on its performance the day after the video came out to see how they did. Going back to April of 2023, the Vanguard S&P 500 was the top performer, but Ares Capital, ticker ARCC, just narrowly missed out, and these are on a total return basis as well. May 25th, the top performer we recommended, Buckle, outperformed the S&P 500, 37, almost 38% total return on Buckle, and the S&P 500 beat out Calmain and Vitesse Energy. But all those picks were green. Moving on along to 9/16/2023, M&T Bank and Kroger both beat out the beloved S&P 500 with returns of 23% and 19%. We'll round up here to the S&P 500's 18%. And we had Royal Bank of Canada, NextEra Energy, Bank of Montreal, and Manpower Group all in the green. But Eversource Energy, Skyworks, which I remember liking, is negative. And LKQ, which I just worked at a facility, that's negative too. They do auto parts like OEM accessories and things like that. And CVS Health is the big loser from that bank of stock picks. November 12th, 2023, the big mamma jamma here. Dick's Sporting Goods, ticker DKS, 81.4% return. Hamilton Beach Brands, oddly enough, they do kitchen appliances and things like that, 57%. Worthington Enterprises, ticker WOR. And by the way, if you scroll over the ticker, you can be whisked away to the land of Seeking Alpha, their summary page, which, by the way, if you've wanted a deal on them, have an affiliate link below. Save a few bucks, no extra cost to you. But Worthington Industries, 53% return. Dillard's, Guess, Lennar, and Marine Products, ticker MPX, all beat out the S&P 500. LyondellBasell and Grief were both positive as well. And then the one negative, shout out to my guy Ryan Williams. He loves his watches. Movado Group, they do watches, negative 1% total return. December 2nd, 23, we did not have any picks beat out the S&P 500 with a 14.4% return. Gentex was positive and Marine Products once again. But Shutterstock, I thought they would do much better, down negative 14% total return since then. Hey, if you've got a DILF in your life, you might want to tell them about Oxford Industries, ticker OXM, because they own the Tommy Bahama brand. Almost a 12% total return, which beat out the S&P 500. Our other two picks, negative totals, which is CNH Industrial, Case New Holland, negative 4%, and the RMR Group, negative 13%. January 13th, we've got NextEra Energy, M&T Bank, EOG Resources, all beat out the S&P 500 with double-digit returns. A look at NextEra, 25% total return. S&P 500, basically about 10% return. And with a big negative 16% return was Rexford Industrial Realty. On to March 9th, 2024, NextEra Media Group, ticker NXST, 8.39% total return, number one spot. PepsiCo and Lockheed Martin also beat out the S&P 500. Regions Financial and Hershey, once again, positive total returns, but in the negative column, double digits, buckets of yuck around here. Haverty Furniture Companies, Comcast, ticker CMCSA, Rexford again, Bristol-Myers Squibb struggling, and Prologis. The REITs have really gotten hit hard. Ticker PLD, very solid company, but could be an interesting one to look at. And 3/31/2024, Playtika beat out the S&P. They do mobile games. That's a fun company to take a look at if you're looking for something in the gaming industry. Mobile games, 24% total return. VOO was negative, as well as Marine Products for the third time. Build-A-Bear Workshop pays a dividend. Yes, they do. Negative 0.91%. And Nathan's Famous, not very tasty, negative 3% total return. And up here we have our very first cheap stock video from November 23rd, 2020. So if we look back and start the day after on the 24th, we picked Anthem. So Anthem ended up they morphed into Elevance Healthcare, ticker ELV, which had a big 79% total return since November of 2020. The S&P, 51%, very nice. Lockheed Martin, 36%. Cisco Systems, 25%. And ticker TROW, T. Rowe Price, negative 11%. Now, all in all, we had 55 total picks. 36 of those, or 65%, had a positive total return, but 19 of them, or 35%, had a negative total return. 20 of my picks beat the S&P 500, which is good for 36%, and the average total return of the stocks I picked is 11.03%, but check that out. It is very hard. This may be one of those uncomfortable truths. It's a very difficult thing to consistently beat the S&P 500, which had a total return of 17.58%. So what does all that mean? Probably that it's a little bit more difficult to pick individual stocks than one would think, at least from my experience and what I've seen and witnessed, but I like the fun of it. I like the enjoyment, and as I morph and grow on this journey, whatever you want to call it, going to be focusing more on quality businesses, which I think we have one for you right here in PPG Industries, ticker PPG, which is a company that's been around for a long time, since 1883, and they make all sorts of paints, coatings, and specialty materials used in many different industries. I mean, their products are everywhere, from the auto industry to construction to aerospace and much more. And I think what's cool about them is that their business isn't really something that can be easily disrupted by AI or new tech, because painting and coating physical objects, I know, is a hands-on process that still requires human expertise and labor. So PPG looks pretty good for dividend investors because they're a dividend king. They have over 50 years of dividend increases. Their products are everywhere, and the world still needs what PPG is selling. Simply Safe Dividends gives them a dividend safety score of 93, very safe. They reaffirmed that safety score on May 3rd, 2024, so the people at Simply Safe took a look and said, yep, we still agree with our assessment of that. 52 years of dividend growth, 125 years of never missing a dividend payment. That is strong. They actually went ex-dividend on May 9th, the day before this video was recorded, currently paying $2.60 per share annually, but it looks to me like the next dividend payment after this one, as you see here, 1, 2, 3, 4, 65 cents is going to be another raise. I'm going to go out on a limb and say it's probably going to be raised to 68 cents per share every quarter. Now, currently their dividend yield is about 7% above the 5-year average, and look at that PE, 15.7. So they predict you'll be paying about $15.70 for every $1 of PPG's earnings. Couple metrics here. We like to look back at 10 years worth of data. That's what Simply Safe shares. If you want to zoom in on any of this, pause the video, check it out a little more. We're going to go quick. They have a free cash flow payout ratio that's very low. We'd have to look in to see why it popped up to 128% in 2022. They may have made an acquisition or such, but currently 38%, very nice. Free cash flow per share looks like it hit an air pocket, but it has recovered nicely. Sales growth, yeah, it's been dying off a little bit since everybody started going back out in the world, doing things. Shares outstanding, just trickling, buying back 237 million, but their total sales still creeping up and to the right. I like their margins. Return on invested capital is something that I have grown to really love. Would love to see it consistently above 15%. That's a really good number to look for, but historically they've been way above 15%, and obviously they hit that air pocket, as well as respectable operating and free cash flow margins. I like to see that their net debt is trending down. Their net debt to EBITDA is 1.90. So what that means is that it would take about 1.9 years to pay off all their net debt using the earnings before interest, taxes, depreciation, and amortization. And the interest coverage ratio, I don't like to see it trending down, but it's still at a solid spot. They have $9.23 of operating income to pretty easily cover every $1 of interest expense on their debt. And if we take a peek over at alphaspread.com, they have an intrinsic value of $159.84 on the base case, meaning about 5 years of flat earnings. So they could potentially be about 15% undervalued according to alphaspread.com. And if you need one more feather in your cap, take a peek at this. Shout out to ceobuys.com, but we see that a day ago, as of this recording, which was disclosed on May 9th, their CEO, Timothy Knavish, weird name, doesn't sound like somebody you'd trust, Knavish. He's a fiendish knave. Timmy Knavish, he bought 2,061 shares at $133.24 of his own money. So he dropped a cool almost 275 grand. And as we say, people are buying stocks for one reason that I know of. They think the share price is going to go up. So there you go. Their CEO showing confidence in the business and that it might be at a good price to pick up as well. So yeah, don't forget to let us know if you enjoy the cheap stocks to buy now videos. But hey, in this floating little box next to my head, I share an uncomfortable truth with you in a portfolio update we recently did. So if you click this floating little box right here next to my head, I'll tell you all about that uncomfortable truth there.